Hey guys, Scott from Scott Phillips Trading here, and I want to talk about Bitcoin today. It's been a while since I did a video, so I'm going to give you an update on my thoughts on the current Bitcoin situation. Now, the first thing I want to show you is how different this looks when you take it from arithmetic scale to log scale. So for cryptocurrencies and things which are going up very fast, it's far more appropriate to have a log scale chart. So if we log scale chart and we zoom it back out, what you see is very different. This is going back to 2013. You can see the original bubble deflated and then kicked off again. Once it broke this old high here, it was off to the races. And on a longer term chart, this doesn't look over yet. But if you take the log scale off, if you take the log scale off, it looks tremendously ugly. So we have two competing views. At its heart, if this was a regular market with regular buy and sell demand, I'd say this market was completely destroyed from here. The parabolic advance is broken. Parabolic advances are unsustainable and fragile by definition, but this is a somewhat unusual case. So why is Bitcoin an unusual case? Bitcoin is an unusual case because it's a bubble, it's a mania, and typically manias don't end until everyone gets ripped off by them. And there is one group of people that haven't really lost any money yet, and it's Wall Street. So my rough roadmap for Bitcoin and related cryptocurrencies is that it most likely will go further than anyone thinks. Okay, so let's look at the character change. Initially, we should always look at a daily chart. The vast majority of people make their decisions based on daily charts, and daily charts are far more reliable than intraday charts. And that's the theme of today's video, and I'm going to show you some detail on that in a minute. So if we look at this end phase of the move, you see big candles towards the end of a move. You start to become suspicious of change of trend or a break in trend. So after these big candles, we'd start to be thinking about reversal. We have a pullback, we have a retest of the highs here. At that retest, which failed, it becomes obvious we're gonna test this low. We broke it. I thought that this low here would hold. It didn't hold. Went all the way down to 9,200 or so, and we've retested this low again, and there is some cautious signs of optimism. So this here, we have rejection of the lows in this candle, we have a rally, and then we have the sellers trying to take control, and they cannot push it down below this low here. At that point, we can reasonably assume that the sellers are weak and also the buyers are weak. And so what we have here is an obvious triangle pattern. So we have the triangle here and the triangle here. Now, what I want to show you is triangle patterns are a war of attrition. So let me zoom in so you can see a bit more granularity here. And you can see the triangle pattern here and the triangle pattern here. We broke out to the upside. So what is a triangle pattern? It's not just a pretty picture. Like if you think that you're going to get predictive results by drawing silly lines on charts, I got news for you. It's not going to work out that way. So what it is the sellers took control in this leg, drove the price down. Sellers drove it down as low as 9,200. Buyers pushed the price back up as high as 12,900, 13,000. Sellers took control again, but the sellers could only push it down to 10,000. Buyers took control, could only push it up to 11,600. Sellers took control. Okay, now what I want to point out to you is that each leg of the triangle gets smaller. Smaller and smaller and smaller. So as each leg of the triangle gets smaller, what we can reasonably infer from that is that both sellers and buyers are exhausting themselves. There's only a certain amount of selling pressure the sellers can muster. There's only a certain amount of buying pressure. So what we have here, if we take it back out to a daily view, is a very useful idea that you can treat this as a war of attrition. Eventually, one side or the other is going to be exhausted, and then when one side or the other is exhausted, the other side will, by definition, take over. If the sellers have no more power, then the buyers just get a free kick. If the buyers have no more power, the sellers get a free kick. So what we have here is to make our best guess as to what's going on, and you can see that depending on where you draw the triangle, you know, if you draw the triangle from somewhere else, you're going to get a different line. If you draw the triangle elsewhere, we've already broken. Which is my whole problem with triangles, and my whole problem with subjective trend lines is that when I feel bullish, I draw bullish trend lines. When I feel bearish, I draw bearish trend lines. So what I think here is we have cautious optimism that a strong break above here, which we haven't had yet, will probably lead to further market strength with an early target of here. If we get much past here, we're going to test the old highs. If we get past the old highs, we're probably going up, up and away again. Now, the converse is true. If we break below here, we're probably going to test this low. If we break this low, we're probably going to really scare the children. And there are people who will get out here. There are people who will get out here. There are people who will get out here. People tend to get out around old lows. So if you think about what's going to happen, we break down this side of the triangle, it's probably going to push it down to here, which cascades a whole bunch of new sellers, pushes us to the next one. Cascades a whole bunch of new sellers down to here, and then we push it past here, and then, you know, we've got this momentum of selling pressure, which is probably going to scare people into further selling until we're somewhere around here-ish. No, exact totals are not accurate. They're just guesswork. But, you know, a reasonably proportional low would be to below 8,000. That would cause the whole bull market thesis to be in peril, because if you look at pullbacks tend to take two legs. So we've got, in this previous pullback, we have one leg, a leg up, and then a second leg down. So they're usually two leg down pullbacks. So here we have a leg down, a leg up, and then another leg down. That's the most common form of pullback. And here we have a leg down, a leg up, and a stronger leg down. So it's a perfectly proportional pullback within a longer running bear market. If we go beyond this two-legged pullback, then we're not talking about just a pullback in a bull market. Then we're talking about a potential new bear market. And then once you can make the case for a bear market in crypto, then it becomes kind of a self-fulfilling prophecy, and vice versa. So what we're looking for is resolution today. We're looking for a breakout above here, which will probably lead to here. If it gets past there to here, it's probably going to run all the way, probably to 30, 35, something insane like that. Now, what I want to show you is hourly charts. Now, you can see on the hourly chart we're sticking pretty nicely to a triangle thesis. I drew a different trend line yesterday, which is a big trap, which showed that we broke out. And my point is that what really matters is where the market closes. The intraday wiggles and patterns are valuable and reliable. For instance, if you see bigger picture triangle patterns playing out, you can zoom in and you can see there's a mini retest to the highs here. That's a perfectly valid sell setup. You can see at the other end we've got a retest buy, perfectly valid buy setup. But what you can't do, here again we have a fake out buy at the trend lines. What you cannot do is assume that one of these intraday patterns is somehow going to morph into a a game-changing, longer-term thing, because it happens sometimes. I can do it every now and again, but on the whole, it's a poor betting strategy. So on the whole, if you're taking intraday patterns, you ought to be looking for intraday resolution, and if you're taking daily patterns, you ought to be looking at daily time frame resolution. Thanks very much.